The effect of sterling on international investment trusts. Investing in UK assets may appear difficult to justify with the relative slump in the value of the sterling. However, this fall in value brings opportunity. The decline in sterling since April has made UK investments more attractive to those holding currency in US dollar or euros. We foresee that sterling will be a particularly important factor in investor returns over the coming months. Importantly, we see value in holding funds in international investment trusts. Those holding funds in US dollars are seeing the most gains in recent times, with the weakness in sterling when weighed against the US dollar being particularly beneficial. Currency will shape your returns. International investment trusts look to be largely insulated from sterling's 18-month low. However, many of the FTSE 100 UK-based and owned companies can claim their earnings are largely generated outside of the United Kingdom. In early 2018, we saw sterling holdings values against the US dollar. Although nowhere near the levels we have seen in the past decade, the peak of $1.43 to the pound was enough to have a negative impact on funds with non-sterling exposure. However, this trend has effectively reversed from April 2018 to August 2018. The value of sterling fell rapidly, with £1 being worth just $1.27. Those holding international investment funds with high non-sterling exposure will have indeed benefited from the weakness. With the political situation only becoming more uncertain in the months ahead, we continue to see the value of sterling fall going forward. There is an argument to be had that as the political situation becomes clearer, with a suitable deal approved for the UK's departure from the EU, sterling may start to return greater value. This would also clarify the situation and return with a greater sense of certainty. It's very difficult to predict what will happen over the next year. Certainly those that have held non-sterling investment funds will have benefited in recent times. But is that trend set to continue in 2019? Ultimately, only time will tell.